Hi, and welcome to the Stock Scores Market Minutes for August 14th, 2017. This week I'm going to talk about fear and recklessness, then my weekly market analysis, and finally the trade of the week, a long trade on LC. Traders must avoid fear and recklessness. They're actually similar things. Both are irrational, but they're also different in that fear avoids taking good trades and recklessness takes bad trades. We want to avoid trading with fear, but we also want to avoid being reckless. Trades should be made based on evidence. You look at a trade, does it meet your rules? Is it something where your emotion is being involved, or is it a logical concept, A plus B equals C, therefore I should take the trade? Or are you just saying, I'm going to hope that it works out? If the evidence indicates that the trade is good, then don't let fear stop you. But if the evidence says that the trade is a bad idea, don't be reckless and be a gambler and take it anyway. It's a very difficult thing to differentiate between what fear is telling you to do and what recklessness is telling you to do. And the real difference comes down to what does the evidence support. You got to look at the evidence and then decide whether it's worth taking the trade. All right, let's get into this week's analysis. And of course, we had some volatility to the downside this week. We had a failed breakout, so that happened on Monday. There was a nice ascending triangle pattern building here. This is the 30-day, 60-minute chart. We had a breakout, and then things kind of fell apart because Trump started saying things about North Korea, basically, and that's where we got the sell-off. And we've continued to move down through the week, closed the week at the lows, and broken this short-term upward trend that existed on the, as I said, the monthly 60-minute chart. Now, looking at the long-term time frame, we are still okay. We are still above the upward trend line on the medium term, and on the longer-term trend line, we're also still up. So, although this is a negative sign and deserving of some caution, the buyers still remain in control. Moving along to the Russell 2000, we broke this little upward rising wedge pattern. That's a negative. That looks to me like we want to see more weakness in the near term. The upward trend line is about there, so there's not a lot of downside till it hits that. But the Russell, the small cap stocks have underperformed the large cap, and I think that they're just generally a place to be avoided. There's no action there, and until we can get a breakout and some upward momentum and see a pickup in volume, see how volume is quite low, there's just nothing going on in the small cap stocks. Moving along to the TSX, similar situation where we had weakness this week because of what was happening with North Korea. But in the context of this chart, it hasn't gone anywhere in the last month. We're basically sideways, unlike the S&P, which has been rising for the last month. So this is kind of a neutral chart. It's been sideways, bearish in the very short term, the last 4 or 5 days, but pretty good support back in here. So I think we just remain range bound in this dead, quiet TSX market. Now, longer term, the upward trend was broken. We talked about that a number of times recently. It's not really gathered any momentum to the downside. It just seems like the buyers aren't interested in buying Canadian stocks. And it makes some sense. Oil has not been great. Gold, although it had a decent week last week, has not been great. And all of the industries in Canada that revolve around those commodities, like banking, for example, very dependent upon what goes on in the commodity sector, and they're just dead areas. So the Canadian market is tired and doesn't have any interest among the buyers. Now, if we want to get worried, watch for a break below that support line. If we want to get excited, we need to break out of this sort of downward sloping channel that the market has been in. On the TSX Venture, similar situation. The sellers are in control here. Each wave that the market takes has a falling top. That shows that the sellers are in control. Very simple rule to use in technical analysis. If there's falling tops, the sellers are in control. If there's rising bottoms, the buyers are in control. And for now, the sellers are in control, and it looks like they're going to continue to send this market lower. You can see the stock scores have been below 60 for some time, even going back into here. So this is a market really generally avoided, but there can be individual stories on the microcap stocks that can do well because they have something hot going on within them. Moving along to the U.S. bond market, treasuries were up this week. That means interest rates went down a little bit, but it's pretty range-bound, quiet trading. The thing I'm waiting to see is, does this break of the downward trend materialize into an upward trend, which of course would mean a downward move in interest rates. Nothing's really gathered any momentum yet, so it's, I think, kind of a quiet, dead market. We need to see it break out of that pattern. On the US dollar, it has been falling, kind of gone parabolic. It is now at support, where it should hold, but it may not hold. And typically, you'll get a holding pattern here for a few weeks at least, and then it can break down through support, or it can rally and break resistance. For now, I think it's going to be sideways for the next week or two. But you want to watch it closely. If it breaks below this support zone from these lows back in here, then I would expect further weakness in the US dollar, perhaps taking it down into this zone next. And on the gold chart, it's been a kind of a dead market, and I haven't been a big fan of gold for a long time. It has broken this downward trend line this week. The political tension with North Korea caused people to look for safety, and you can see that gold rallied on that. The problem that I have with that is that they're like a switch. That political tension can be turned off just as quickly as it gets turned on, and if it gets turned off, then you get a quick reversal in gold. So I think you have to take a very short-term mindset. There's not a real fundamental reason why gold is going up. It's not like there's supply constraints or the demand is particularly strong. It's simply that there's a little bit of worry in the world about what would happen with North Korea. And, if one day that gets resolved or tensions go down, you're going to see gold go right back into this pattern. So trade it from the long side if you're so inclined, but don't be a big believer yet, because I don't think it's well-founded yet. On to oil. We've talked last couple of weeks about oil rallying up to resistance. It got there now. It hasn't been able to break through. You can see it's just kind of trending along that downward trend line that has been in place for some time. Now it is moving back to the upward trend line. See, it runs away, pulls back, runs away, pulls back, runs away. Now it's pulled back. So does that mean that the next move is to break the downward trend line, which would be harder? Or does that mean it rolls over and moves down to new lows again? That would actually be easier because momentum is down. I don't know the answer. What you want to watch is which trend line gets broken first. If we get a breakout on Monday, then the buyers are stronger than they've been in many months. If instead we get a breakdown through this shorter term upward trend line, then we're probably going to move down and retest some of these low inflection points. So real critical time early next week to watch what oil does. And finally, the fear chart. We've had a pickup in fear, broken the downward trend line this time. So that is a sign that worry is coming in. Remember, seasonality, September is historically the worst month of the year for the market. So this could materialize into something bigger than just a little tension with North Korea. It could be the catalyst for some real sellers to come out. But for now, I would remain somewhat cautious. I'd like to see a rising bottom build in fear. We haven't really had that. You think about all the times we've had these little blips in fear, and they tend to evaporate. This one seems to be a little stronger so far, so keep an eye on it. I do like that volume is increasing there, so perhaps this will finally be a bit of a correction, long overdue for the market, but I would wait until we see a break of those upward trend lines on the weekly chart that I showed you at the top of the presentation. So, U.S. stocks, I'm still going to hold my bullish rating long-term, neutral now short-term. Canadian stocks, bearish long-term, neutral, not particularly bearish, just kind of a lack of interest. Gold, neutral long-term, but could, with a little more strength, get bullish in both time frames. Oil, neutral in both time frames, although the long-term picture is still fairly negative on oil. The rise of tension between North Korea and the U.S. has been a catalyst for volatility and selling pressure in stocks this week. While medium and long-term upward trends are still up, some caution is warranted. Gold is benefiting, but that could be short-lived. Oil stuck at resistance. Watch it closely next week. Fear is on the rise, but we are far from a panic. All right, let's look at the trade of the week, a day trade I did on, I think this was Tuesday, whatever August 8th was. It's all a blur in the summer. But one of my key indicators is looking for abnormal volume. So I created my own indicator called abnormal volume indicator. I could maybe come up with a better name, but that's what I call it. And you can see it plotted on this stock, 4.77. That's extremely high. And it's the reason I traded LC on the 8th of August. What you want to look for is abnormal action and then watch for the entry signal. So I've got another indicator called a message candle. It's a little white dot that you can barely see there. And that triggered my entry point. My risk management lines are drawn accordingly, and up the stock goes. So it closed the day up just under 8 RR for the day. These lines here are how I calculate reward for risk. So if I risk $1,000, and in this case it makes, say, 7.8 RR, multiply that, that means a $7,800 profit, just so you understand where the numbers come from. So all of these indicators are provided to my students, and things that I use every day in the active live product that we have at Stock Scores. More about that when we launch the new Stock Scores website, which will hopefully be very soon. All right, well, that has been the Stock Scores Market Minutes for August 14th. Have a great week in the market and trade well.